What is going on, everyone, and welcome back to Explain the Charts. Today is November 17th, 2025, and we are breaking down the price action for Amazon, ticker symbol Amazon. The stock has had a wild couple of weeks, rocketing to a new all-time high before pulling back sharply. In this video, we'll cover the key news driving the stock and then dive deep into the charts to see what they're telling us. First, let's talk about the news, because it's been overwhelmingly positive and is the key driver behind the recent rally. About a week ago, on November 10th, headlines were everywhere about Amazon hitting a new all-time high. This was fueled by a stellar Q3 quarterly update where sales grew 13% year-over-year, and more importantly, Amazon Web Services, or AWS, saw sales jump 20%, its fastest pace since 2022. Adding to the bullish sentiment is Amazon's 7-year partnership with OpenAI, a deal valued at a staggering $38 billion, which will further cement AWS dominance in the crucial cloud and AI infrastructure space. On the e-commerce front, Amazon is also making strategic moves, launching Amazon Haul to target the budget-conscious consumer with items under $10. Fundamentally, the company is firing on all cylinders, with its high-margin cloud and advertising segments growing rapidly. Even at these elevated prices, many analysts still consider the stock a buy, citing its attractive valuation relative to its strong growth prospects. Now, let's see how this incredible news has translated to the price action on our daily chart. The long-term trend is undeniably bullish, as you can see this steady climb throughout the year. The most dramatic move happened right here at the end of October, corresponding with that fantastic earnings report. On October 30th, the stock closed around $230, and the very next day, on October 31st, it gapped up to open at over $250. This created a massive earnings gap between the high of October 30th at $232.82 and the low of October 31st at $243.98. This gap represents a powerful surge of buying pressure and is a significant technical event. Following that gap, the price rallied to a new all-time high of $258.60 on November 3rd. Since hitting that peak, however, we have seen consistent selling pressure and a pullback of over 9%. The key question now is whether this is just healthy profit-taking or the start of a more serious reversal. The first major test for the bulls is the top of that earnings gap, right around the $232.80 level. You can see that the low on Friday, November 14th, was $232.89, almost perfectly testing this critical support zone. As long as the price remains above this $232 to $233 area, the immediate bullish structure remains intact. A break and close below this level would be the first major warning sign for buyers, potentially opening the door for a deeper correction. Below that, the next significant support would be the highs from September, around the $238 level, although that was already broken on the way down. A much stronger support area would be the pre-earnings consolidation zone around $220 to $225. On the upside, immediate resistance is now at the recent consolidation area of $243, and then the all-time high at $258.60. Let's switch to the 1-hour chart to get a clearer picture of this recent downtrend. Here we're looking at the price action since the beginning of November. You can clearly see the peak at $258.60 on November 3rd, and from there, a textbook series of lower highs and lower lows has formed. This defines a clear short-term downtrend channel. Each attempt to rally has been met with selling pressure, establishing new short-term resistance levels along the way, first at $252, then at $248, and most recently around $243. For any short-term bullish reversal to begin, buyers would need to break this pattern. This would require putting in a higher low, followed by a break above the most recent lower high around the $243 to $244 area. Until that happens, the bears are in control on the shorter time frame. Notice the high volume on the down moves, which suggests conviction from the sellers during this profit-taking phase. The price is currently consolidating just above that critical $232 support we identified on the daily chart. This is the battleground right now. A breakdown here would confirm the short-term trend is continuing lower. Finally, let's zoom in even further to the 15-minute chart for the last couple of trading days. On Thursday, November 13th, we saw a sharp drop from around $243 down to the $236 level. Then on Friday, November 14th, the stock attempted a small opening bounce but quickly failed, selling off for most of the day. The price action closed near the low of the day, which again reinforces the current bearish short-term momentum. This intraday view shows us that sellers are still in firm control, and there are no signs of a reversal just yet. A trader looking for a long entry might wait for the price to reclaim and hold above a level like $238 on this time frame before considering a position. Conversely, a break below the Friday low of $232.89 would likely trigger another leg down. So, to recap everything, let's go back to the daily chart. The long-term fundamental picture for Amazon is incredibly strong, supported by growth in AWS, AI, and advertising. The long-term technical trend is also clearly bullish. However, in the short term, the stock is in a correction after hitting a new all-time high. Let's outline the key price levels to watch. Critical support is at the top of the earnings gap, around $232.80. This is the line in the sand for the bulls in the short term. Below that, further support lies around the $225 and then the $220 levels. To the upside, resistance is at the recent breakdown area of $243 to $244, and then the all-time high of $258.60. Now for some potential scenarios. The most likely scenario, which I'd give a 60% probability, is that the stock finds support in this $230 to $235 zone and begins to consolidate. The strong fundamentals should prevent a complete collapse, and this area offers a logical place for buyers to step in. We would need to see a break of the short-term downtrend to confirm this. A second scenario, with about a 30% probability, is that support at $232 fails and the price continues its correction down towards the $220 to $225 zone. This would still be considered a healthy pullback within a larger uptrend. The least likely scenario at 10% is a catastrophic failure where the price slices through all these support levels, indicating a major trend change. This would likely require some broader market panic or negative company-specific news. So, look for how the price reacts around this crucial $232.80 support level in the coming days. That will give us the best clue as to where Amazon is headed next. Thanks for tuning in to explain the charts. Before you go, please remember that this video is for educational purposes only and is not financial advice. Trading stocks involves risk, and you should always conduct your own research and due diligence before making any investment decisions. Consult with a financial professional if you need advice tailored to your specific situation.